than the industry. On this call, we have the benefit of our business leaders to provide you with update on Grasim and the businesses and to answer your questions. Before I hand over to them, we've identified key focus areas which I would like to walk you through. Number one, employee safety. We started work from home for all our employees before the lockdown was announced. It has been very efficient and has not posed any hindrance in our work. Government regulators and banks have given us necessary support to work from home. Given the employee safety and government directives, we have shut down some of the plants and some are running at low capacity utilizations. We will have more details from the business leaders. Number two is liquidity. We had treasury of around rupees 2,000 crore in December 2019, and we've been able to maintain a similar level of treasury by year end as well. We're not sharing any specific financials on this call as we are yet to declare our March financials. We can, however, state that our liquidity position is very strong, both with treasury as well as credit lines available in order to meet, and overcome this situation and look beyond. Third is CapEx on standby. As of today, we've put our large CapEx plans on hold. We are closely monitoring the situation. This is not to say that we are withdrawing all our CapEx, but we will take decision on these CapEx based on the lockdown situation as well as the demand outlook. Fourth and the last focus area is cost management. We are closely monitoring our costs and we are looking at different scenarios of lockdown to monitor our costs. And we will evaluate ways to optimize them if required. I would now like to hand over the call to Dilip to provide his inputs and updates. Kalyan and Jayant will follow Dilip. I'd like to highlight that we cannot discuss any March numbers or any company-specific outlook or guidance. We'll upload this call on our website so that it is easily available to everyone. So over to you, Dilip.
Okay. Thank you, Ashish, and a good afternoon to everybody. I'll give you a brief update on the VSF operations before passing on to Kalyan and Jayant. As we all know, the situation world over is highly uncertain and very unpredictable. Therefore, it is extremely hazardous to make any guesses at this stage. So what we have done is we have painted multiple recovery scenarios and developed a business continuity plan by stress testing our business against these scenarios. The key element of our BCP is sustaining healthy liquidity, which I think Ashish spoke about, extreme focus on cash and reduction in fixed costs. A fourth dimension very important for our BCP is the supply chain readiness, because we have ensured that there is adequate material available in the pipeline so that whenever customers start, they don't starve for the material. We also have got permission to run 3 out of our 4 factories from the government because we are a continuous process industry and we do make priority item products. One of the factories is already running. So what we have planned out is that moment the end consumer starts, within 3 to 4 days, all my units will go up on stream. And therefore, we can ensure a vertical startup when the demand resumes. We have also made sure that there is adequate raw material available, there are enough stocks, enough input material, and because most of our factories have got townships where people live in the premises, it won't be very difficult for us to get the workers, which is going to be a big problem on the startup. So what we have done is we have also built up plans to run the factories with flexible team, or what we call skeleton teams, because availability of workmen may have to be constrained because of the social distancing norms. What we have also done on each of our factories, we have put up very strong SOPs and controls to ensure hygiene and social distancing. Things like very strict gate controls. Everybody who enters the factory, including outsiders, own employees, we monitor their temperature, their health check done by the doctor. We are even things like trucks when they come in, the drivers are not allowed to enter. We have got special drivers who ferry from the gate to the plant. The drivers leave the truck outside. We sanitize the trucks and then bring them inside. So we have built up hygiene tunnels. We have got dedicated buses to get some of our employees who come from outside, and we have done 1/3 seating. So a lot of spacing is done in the buses, and there are a lot of some actions we have taken so far. But with God's blessing, there have been no cases at all anywhere in our units or townships. In terms of markets, I think globally all the textile consuming and production centers are in a lockdown state. The biggest consumers are EU and US. You know what is happening there. The biggest production centers are Turkey, Bangladesh, Pakistan, Indonesia. Again, similar situation. So as we speak, there is no pull from the market right now. So I think it will revive once the lockdown gets over. Things have started. Spain has started opening out their stores, etc. So I think as the demand picks up, as the stores open, the demand will pick up, because fiber is a derived demand. Supply chain wise, as I told you, we should be up and running very fast for the domestic market as well as global markets. And China supply chain also, is fully ready. So I don't think supply will be an issue once the demand sets in. I think with this background, I will pass on to Kalyan to talk about chemicals.
Thanks, Dilip. Good afternoon to you all. Keeping in context the current situation, COVID situation and lockdown, one of the strengths of Grasim is that its products serve significantly diverse range of industries and end-use segments. If you see the products that we produce of various chemicals, fertilizers and insulators, we actually supply into food industry, phosphoric acid going into edible oil, sugar refining, jaggery, cheese. We supply into water industry, everything around disinfection and hygiene, essential household items. We supply into industrial continuous process industries, be it oil and gas, etc. We supply into pharmaceuticals, for example, some of the essential ones like ibuprofen or anthraquinone. Some of our products need to go there. We supply into agriculture, agri products, and also we supply raw materials into agrochemicals. And our own fertilizer plant supplies urea. So hence our 13 manufacturing plants that we have are in various phases of startups. In fact, a couple of plants have not shut down at all. If you think of urea, which is an essential commodity, the urea plant as well as our supplies of agri solutions to farmers, they have continued without any disturbance. We have one or two plants which have been running continuously since the lockdown, and we have several plants that have been running at a lower level, and all the plants so far have received permission. It's a question of starting up in the next few days. So what have we done in the last 2 to 3 weeks? Some of it will be repetition of what Ashish and Dilip talked about. Is we really focused on ensuring our safety and health processes and systems are upgraded to the new reality. I think the new reality is without question that anyone who is entering anywhere, we had to practice a very, very different kind of approach. And we are establishing that, and we are pretty close to being ready with that. Second is people's well-being. It's about migrant workers. It's about drivers. It's about any other sudden visitors, as well as our own staff and colonies. We have also practiced running these plants at different levels, from anywhere between 50-20% to all the way to 100% of running of these capacities. And we have also tested, and we struggled, but at the same time tested supply chains. From initial first week having struggled, later on now we have products that are moving. Of course, we had to look at our line of sight of our customers and customers' customer. It's not enough if we have the product and we produce. It is about our customers and customers' customers. So we've been actively helping them on the advocacy front, as well as ourselves. We being the leader, we've been going back to the government to talk about what we can offer and how we can help. So, and then of course, Ashish spoke about focus is significant cost reduction focus is there. And automatically, some of them have been stopped, but several others we've been spending a lot of time on focus. So we feel we have a very strong business continuity plan as of now. Because of the scenario test that we have done, and we believe even if there are some more unpredictable changes thrown at us, given we have a global understanding of how our other plants across Southeast Asia, Europe, and US have run, we had some best practices learning because majority of these locations have already been running manufacturing plants under a significant amount of virus spread. So we also learned, and then we believe we have prepared ourselves well for these changes. We are hoping for a lot more production to start in the coming days. Let me pause there. I'll now hand over to Jayant. Jayant? Jayant, are you on mute?
Sorry. Thanks, Kalyan. Afternoon, everybody. So I just wanted to give a little brief before we get into some detail. One is that, particularly if you look at the chloralkali industry, it's like a tandem industry. If you don't balance your caustic and your chlorine, it's very difficult to run the plant steadily. So I think over the last couple of weeks, that is a job which we have done fairly well. We've got a couple of our plants running already at 30-40% right from day one. We've got permissions to run all the other plants, and as and when the demand balances and we see the sight of chlorine and caustic moving out together to run that plant safely and successfully, that's what the plan is, to start manufacturing these products. From a customer perspective, aluminium never stopped, the refineries never stopped, steel came back, local municipal corporations have been buying chlorine. Disinfection is being doing pretty well, so there is a fairly large demand over it. And we've been able to cater to largely all these demands with the plants which are running at this point of time. Net, I think what we are seeing is that there is a steady improvement in supply chain. We are also now getting a lot more feelers from the market as other plants are opening up in the vicinity. I think yesterday, the note which came out today from MHA also has given a much larger direction and clarity. While coming to steady state and operations, I think will take some time and we'll evolve as we go along. But we expect that at least all our plants would be up and running by the end of this month. So with that, I think Ashish, Saket, I would hand it back to you guys.
Sure. We can now, I guess, open up to questions. So I'll hand over back to the operator to handle the queue, etc.
Sure, so thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead.
Yeah, hi. Thanks for taking my questions. I essentially had one question on the capex front. You did mention that we're relooking at it. Can you give us some sense on what kind of capex cuts can come through, what is at very, very early stages and can be put on hold, so that we have a fair assessment of what kind of outflow we see for capex in this environment? I mean, I appreciate it's very early stage, but if you can give us some sense where the deferment is possible.
Yeah, sure. So Gunjan, let me start, and I will request Dilip and Kalyan then to pitch in if required. In capex, if you recall, we had around 3,200 kind of a number for full FY20, and then we had budgeted it as per the last presentation for FY21 about 3,880. Now, right now, looking at the situation, both because of lockdown, because you can't mobilize workers, etc., as well as just to take care of the liquidity position in this situation, we have put all the capex substantially on hold. So the outflow that you will see during the lockout is not going to be anything meaningful. There can be some capex creditors that have been pending, which may need to get paid off, in April, May. But other than that, we will not see any meaningful number coming out of capex in this, during the lockdown. I can't say when we'll restart because we're constantly monitoring the situation there.
So let me maybe put it in this way, that if you can share what is the maintenance or essential capex that needs to be done, post lockout or lockdown is lifted also. Clearly demand will take time to come back, particularly the VSF side. I think it will take its own course. So from that perspective, I just wanted to gauge what is the essential capex, maintenance capex that will need to be spent in F21.
Let me do one thing. Right now, we had prepared already broadly our planning and budgeting, where we take both maintenance as well as the capacity enhancing capex plans, etc., for FY21. Now, that plan has obviously turned upside down, and we have to relook at the plan. So I think we'll be in better position to give you the numbers, and possibly if we are ready by the time we announce our March results on what the capex number for the year would be. I think it'll be a better conversation to have rather than having it now, where I give some guidance on maintenance capex, and it turns out that by the time we come out of the situation and when we're giving you the real numbers for FY21, that would be different.
Okay, and this liquidity number which you pointed out, 2,000 crore, this is the cash and the liquid investments with you. But from what I recollect, there is debt, net debt on the balance sheet, right? So post the capex and the idea funding that we did.
Yes. So the debt number that was there in December that we gave was gross debt number was 4,856, right? And the net debt was 2,585. Okay. What I can tell you is that in this quarter, by the end of the year, the situation is not meaningfully different than what we saw in December. Okay. Both from gross debt and the liquidity position.
And last question on the multiple subs that we have within Grasim's fold. Every subsidiary is, of course, going through a pretty difficult situation at the moment. Is it fair to say that at the moment, how should I look at it as far as the capital call from the underlying subs go? I'm not just talking about Idea here. I'm talking about all the subsidiaries. Is there a case that we can see Grasim is being called upon to fund some of these subsidiaries, or any assessment, any number that you have in mind?
Yeah, sure. So I'll give you, the Ultratech doesn't clearly need any funds, so they are self-sufficient. Okay, the Aditya Birla Capital has already raised funds, and their Advent fund had come, after the approval. So they've just received the Advent fund. So there is no call that we expect from them on Grasim for equity or for debt or anything of that sort. And Aditya Birla Renewable, which is our solar business, the equity infusion out there is generally of small amounts because they do the typical renewable projects with high leverage, etc. And that business actually has not disrupted because of this whole situation. So there is no call that has come, but I'm just saying that, if at all there is a call that may come, that could come from solar equity infusion, but that's small numbers.
Okay, so NBFC also you don't anticipate at this point a big.
No, we don't anticipate any infusion.
Okay, got you. Thank you so much.
Thank you. The next question is from the line of Bhavan Chera from Enam Holding. Please go ahead.
Yeah, good afternoon, sir. Thanks for the update on the overall operations. We appreciate that. So just a continuation of the earlier question, but in much more detailed. Just to summarize, as you said, that we surely will be looking to calibrate capex, because way the demand situation is, there is an opportunity to do capex in a staggered manner. So you would be saving a quite amount of liquidity. And you also mentioned that the Aditya Birla Capital doesn't require infusion, so that looks to be a big positive. So just on the capital allocation, because since the valuations of the company have crashed and corrected to a big extent, and if I look at your numbers, it are at historic lows, like it's quoting at historic price to low book, below replacement cost, 60 to 70% holding company discount to the overall investment in subsidiaries. So as an investor, we see the buyback as the best option to use your current liquidity and capital rather than any other investment, and that has been the case. I think the investors have been demanding in many of the calls. So what's the view of the board? Because obviously this opportunity may not stay very long. So what's the view of the board on that, or the management on that?
Yeah. See, I think today it is our liquidity strength that gives us confidence to actually weather the storm, right? I think buyback is probably more topical at the time when there is no visible large requirements towards any outflow from the company. Right now we are in a situation that we don't know. There's a lot of uncertainty. We don't know how long this situation will continue, what will be the demand outlook. So therefore, it's probably prudent to retain liquidity for the sake of the businesses and company.
Yes, but the VSF has always been a cash cow business, and I think from the operational business, you will keep deploying capital in various businesses, and whichever businesses generate the largest ROC, that should get the capital. And as situation stands today, the Grasim share looks to be giving the maximum ROC for all stakeholders. So wouldn't enabling resolution would help the case? And we had AAA rated company, so I don't think so. Liquidity can be an issue for Birla Group and Grasim. So any thought process you can throw on that? And the other thing on the Vodafone thing, you mentioned that the Aditya Birla Capital doesn't look to be in need of funds as of now, though the situation in NBFC is very precarious. If on the Vodafone, if you can give some clarity, what can be the requirement of funds, or if you have calculated that for next couple of years their balance sheet should also be self-funding?
Yeah. So see, on BIL, situation has not really changed. Okay, and my response to that is same as what I had mentioned earlier, that there is absolutely no call that has come on Grasim for any fund infusion from BIL. So it's difficult to respond to that question in absence of any proposal from their side. And I think we are aware of the sentiments that has already been presented by you guys on BIL, and the decision will be taken on the basis of those sentiments. So on VIL, there is nothing more to add. And just to close the loop on buyback, I think the timing, according to us, is not right at this moment. I think when we need to make sure that the liquidity is best used on where it is required. I'm sure if we come out of the situation, when we look at our capex plan again, etc., and if we see that yes, we will continue to generate enough cash, then we will certainly take it to the board and evaluate a buyback proposal.
Thanks a lot, sir. I appreciate your replies here.
Yeah.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is on your this capex and the net debt position you mentioned. So basically, till 9 months, we had done around 2,000 crore of capex, which was mentioned in your presentation. For full year, we had a estimate, as you said, 3,200 crore. But plant lockdown happened only last 10 days. So, pro rata basis only, we could assume that you would have spent a lot of pending capex in before last 10 days. But you mentioned that net debt position is not materially changed over December. Would that mean that 1,200 crore capex would not have got spent at all? Because you are expected to generate around, very rough estimate. Like last quarter, you generated around 400 crore odd EBITDA. But you said that net debt position has not materially changed. But your capex requirement after it was much higher than your quarterly EBITDA run rate.
Sure. Is that the only question?
I have a couple of more questions. So second question is on fixed cost. So when you say that you are closely monitoring your costs, for example, for overall standalone operations of Grasim, what is the total in a normal environment? What is the total fixed cost, let's say, for a month, and how much possibly there is a scope of cutting that in a distressed environment like current? And my third question is on a subsidiary, sir mentioned about 12 of 2 of the 13 plants in chemical segment are operating. 1 of the 4 plants in VSF is operating. Is Ultratech operating any plants during this past 20 days?
Okay. So, Ultratech, I would just defer that question, to Atul or the management out there to answer that question. I'll pass on that this was a question that came up. Because again, the situation is evolving, so there is a change every day in terms of which plant is running and what capacity utilization and which one is not. On the other 2 questions, I'm happy to respond, which is on net debt and fixed cost. So on the fixed cost front, frankly, if fixed cost kind of a discussion is more relevant for companies in distress or those who don't have strong balance sheet. For Grasim, we need to look beyond this temporary disruption. This situation, in fact, may provide an opportunity for us to come out stronger than the industry. When I said that we are closely evaluating cost management, is when we are running all scenarios, it gives us an opportunity to just relook at things that you don't generally look at, and fixed cost is one of them. So when we're looking at fixed costs, it is giving us an opportunity to break it down and to see that where we can make some savings, what are really fixed costs and what are actually semi-fixed costs. Like for example, a repair and maintenance, which can get classified as fixed costs, can actually be variable in nature, because if the plants are not running, in this kind of situation, you can't even carry out repairs and maintenance. So there will be some savings there as well. Some of the other admin costs are also of a similar nature. So therefore, my point I'm trying to make is that it's less relevant than other cash flow initiatives that we are trying to make. But there's a close look at the fixed cost that we are keeping at. Per month numbers, I think you can look at the financials. It's pretty straightforward. You'll get a number. You'll also notice from our corporate presentations that a substantial part of cost is actually variable, which we have pointed out in our corporate presentation. I think given the sensitivity of these figures, I would not like to share very specific per month number. On net debt, again, like I mentioned in the beginning of the call, it's very difficult for us to share details on the numbers, given we've not declared our results yet and we've crossed the quarter. So suffice to say that the net debt has not changed meaningfully. Like I said, it has gone up slightly from 2,585, which was a December number. It's tough for me to give any specific guidance except to say that it has gone up, but not meaningfully, given the EBITDA generation and CapEx. CapEx, of course, continued till the lockdown. So therefore, I can't give a guidance on whether it is proportionate to 1177, which was given as a guidance for quarter 4. But more specific numbers we'll be able to share with you in May when we disclose the results.
Thanks. I'll get back to the queue for more questions.
Thank you. The next question is from the line of Amit Murarka from Motilal Oswal. Please go ahead.
Hi, good afternoon, everyone. Just also wanted to understand the impact of COVID on the regional trade. So I believe the oversupply in China in VSF was one of the key worries we had. So with this, has that changed anywhere? I mean, the plants per se in China, are they up and running now? What is the situation there?
Yeah. Ashish, you want me to respond?
Yeah. No, Dilip, please go ahead. Thank you.
Yeah. See, the situation is very fluid right now. Now, as you know, the Chinese VSF plants never stopped even when the COVID was at the peak in China also. So VSF is a continuous process industry, and they have been running those plants and building up inventory. Post the normalcy in China, the demand hasn't picked up the way it should have. So the yarn capacity is still running at a very low operation rate, less than 40%. So what has happened is, because until the consuming markets open, there is not going to be any demand pull. So the Chinese VSF plants are finding it very difficult to sustain their operation. So of late, a lot of stoppages have started happening. The OR which was about 73-74% a few days back has dropped to about 63% yesterday. May drop below 60%. So I think it is just an academic exercise, inventory versus running the plant. And they're realizing that they can't keep building inventory and not sell. So I think we are seeing some closures, but I think it's early days and very difficult to say what will happen. So I think it all depends how fast Europe and US comes back to normal. But Chinese domestic demand also hasn't picked up the way they had expected.
Okay, just a follow-up to that. But do you anticipate that situation to kind of cause further disturbance on VSF then? Because if demand is not picking up and those plants, currently the operating rates are down, but generally could that create further imbalances in the trade given that VSF prices have corrected a lot recently?
The fact that they are shutting the plant after 3, 4 or 5 months of running, meaning they are feeling the financial stress. That's all I can infer from that. If they are under financial stress, then the resumption may not happen until the prices are good. That's all I can infer from that. So it has happened after a long time that some plants are now talking of closing down fully. Otherwise, they were trying to cut 10%, 5%, 20% here. So barring some big players, most of them are now. So what I feel is there may be some rebalancing happening, but it will take time. I can't say it happen next quarter, but I think the pressure has started keeping it.
Got it. And could you also touch upon how are you handling your associations and partnerships with the yarn makers and who are an important part of the value chain for you? They would also be having working capital stresses and all that.
Yeah. So the issue in India right now, before we started, the demand was, before the lockdown happened, the demand was very good. So only over the last 10, 15 days that the European retailers and brands and people started cancelling orders. And the fabric side started feeling the pressure. The yarn side still didn't have as much pressure because they had still no inventory build up in the yarn side of it. So we'll get to know only after you restart. So there was a talk that all brands have kind of cancelled the orders, put them on hold. But later on we had a discussion, and I think a lot of brands are going to honor the commitment. Marks and Spencer, I met them, they have told them they're going to honor the commitment. The LVH people are honoring their commitment. So most of the big brands are now saying that look, whatever they have ordered, they will honor. Maybe autumn winter there could be a reduction in orders. So I think we need to wait. Very difficult to predict at this stage what's going to happen. So and in terms of just liquidity is a big issue, but I think the RBI intervention what happened last week or 10 days back, it helped the spinners and the MSMEs to at least take care of the fixed costs, because they have been able to get extra loans which they are using to pay off their workers, and many of them have got their workmen on the premises. So some of them are running their plants despite the lockdown. So they've been allowed to run the plant, so they've got the workers on the premises. So that's what the reality is on the ground.
And so there has been no working capital kind of, expansion or anything like that at your end because of the current situation then?
No. In our case, you see, our terms are we sell on LCs and cash, so we do not have an issue like that right now.
Okay, and is the situation same for the chemicals as well and the caustic side?
The situation is very similar on the caustic side. Majority of our credit is secure, and we don't really see too much of stress in that. The collections are, happening on a daily basis.
Okay, thanks. That's all from my side. Thank you.
Thank you. The next question is from the line of Sanjay Pari from Nippon India Mutual Fund. Please go ahead.
Yeah. For both VSF and chemicals, I clearly understand it's a very tough situation. But just that, in both the businesses, when you do an end-use analysis, what part of our business would be domestic? What part would be global? I understand the direct and indirect also, because your customer could be an end exporter. So, but broadly, if we were to say that, domestic will slowly stabilize, globally may take time, if that's our view, then how do we understand end-use analysis in both the business, end-use sector usage in both the businesses broadly? Domestic and global is what I'm trying to understand.
Sure. Dilip, you want to go first with VSF, and then we can cover chemicals. Chemicals will need to be divided into both, caustic, chlorine, and VAP, etc. So, Dilip, why don't you go ahead first and answer from the VSF point?
If you look at, let me see if I understood the question right. If you see the yarn part of it, the bulk of the Grasim sale is in the domestic market. So about 80 to 85% domestic market, only 15% of the yarn gets exported, and a lot of it used to go to places like Iran, etc. But as you rightly said, the yarn may be domestic, but some of the downstream fabric or garment could be exported. Now, if you see India, the export and domestic ratio again is initiated. The export is only $35 billion, and rest all is domestic. So domestic market is bigger in India. So what one is seeing is if Indian demand is the right stimulus, and if the Indian supply chain starts working well, the impact will be less, because India is not as impacted by the global as far as China and Vietnam and Bangladesh are. Now, the second issue is in the global market, as we speak, the autumn winter sampling, etc. is happening. So it all depends how. I think the move the government has done is a good move. Start after 20 April. Give the time when the sample will be submitted. So if that happens, I think we can hope for a faster demand resurgence. So it will depend how the units start after and how the global markets open up. So I think we will be in a better position to discuss this towards near the time when we have results done.
I understand. Absolutely.
Chemicals you want to cover, Jayant?
Yeah, so if you look at it, we are predominantly domestic. I think our export is just about 5-7% of our total, so that's not very material in terms of overall business size. If you break up chemical into multiple caustic, chlorine, and the VAP segments, so there are some positive stories on the caustic side that particularly we've seen. Essential commodities like your aluminium side, your refineries, your power plants, they never stop at all. So you only there is a continuous line which is going over there. If you look at it from the chlorine side, you've seen pharma, the companies which are intermediate to pharma, sanitation, water, all the state bodies which are taking over water sanitation, they continue to pick up chlorine. There were disruptions in supply chain for the first week or so, but things are stabilizing as we move along. When you go to a value-added products, where I think your question of edge segmentation actually becomes far more relevant, where we see things like pharma and agro segment coming back up. We see things like disinfection segment, water treatment coming back up. So these are the positive sides. On the other side, we still look at, the wires and cable segments and the segments which are dyes and pigments, which continue at this point of time to be slow. And we are awaiting maybe this current circular which has come out will show us over the next week, 10 days what happens over there. So I think our story is mostly domestic, and we are seeing some positive news on certain end products for us. And that's the reason why we are saying that at least 3-4 plants of ours are running. The others have got the permission, and as we see demand balancing between chlorine consumption and caustic, we will start getting those plants up soon.
Yeah, thank you very much. Just a follow-up question. In both the businesses, there are imports, and the ideal strategy for any country in China or any other country would be to pump the products as much as in other markets. I'm sure the government, these are extraordinary situations when a domestic industry has to be protected. So do you think in such scenario, the government would be aware of the need of protection required so that the domestic industry actually gets insulated for a while, or it's tough to take a call on this?
I think the point you're making is a very valid point. It is not only for VSF, it's for largely all the Indian industry, because China has a huge overcapacity in all industries. And second is the Chinese demand, whatever you may say, this is going to be lower than earlier years.
Yeah.
It has been sensitized to the government. We have presented to them through various industry bodies, and they also acknowledged it. So let's see what they come up with. But the government is very well aware of this fact. I said post-COVID recovery will depend upon how you protect the Indian industry. So the China supply chain is up and running. The India will have two-pronged problems: the demand revival, and at the same time getting the supply chain re-energized. So I think Indian industry in general will need a hand-holding by the government in post-COVID scenario. They are aware of it. Let's see what they come back with.
Sure. And can I take the last one? One more. Okay. Just on the currency front, we've depreciated. When you see in a relative context to other emerging market countries, how do you think about this currency depreciation? Logically it should help us, but it is a relative term. So what would be your view on that?
See, our forex exposure per se is that we import pulp, which is a substantial part of the cost of VSF. And in a way, it helps us in realizing better domestic realization because of the landed cost. So, but overall, if you look at it in hard currency terms, we are a net importer because we are selling in the domestic market and importing pulp and some of the other chemicals, etc., also that we use. So keeping that in mind, depreciation, is something that we have to hedge and we have to cover. But there is some natural protection that we get due to the realization based on landed cost. Both in caustic also, there is already current import happening. In VSF, there is at least a reference price, if not, if there is no import.
Yeah, directionally it helps the weakening of currency.
Yeah. Thank you very much. Best of luck.
Thank you. The next question is from the line of Naveen Sade from Edelweiss. Please go ahead.
Hello, can you hear me?
Yeah, Naveen.
Yeah, right. So thank you for the opportunity. My first question was that given the Western world is already talking about moving away from their dependence on China, is there some sort of an opportunity that we sense there? Are there any indicative inquiries, or is there any effort from our side being built? First of all, if at all, if this is in the correct context, if at all there is an opportunity, and in that same light, our capex, which was VSF due in the second half of next fiscal, is there a way then that it can be looked to advance, or some color around that will really help? Thanks.
Okay. I think, Dilip, I guess the question really is that, if I've understood, that because, world may prefer VSF or production coming out of other countries, does that present an opportunity to us for exporting? And if that market is large enough, should we look at advancing the capex? Is this rephrase of question correct?
Yeah, that's what the question is. Thanks.
See, I can only give you my view on this. There is no real one answer to this. The whole world is talking about, yes, move away from China after the experience they have gone for the such of life is moment when they see the right price, people start changing their decisions. So and then people have very short memory. So it's already happening that wherever China has come back and when the prices are good, people have started buying from them. But you are right. To some extent, we have been able to make a dent. Like we do a business in non-wovens, which again goes into the hygiene and medical applications. And Europe and US are the big markets for that. And we are there finding there is a preference. Not everything else remaining same. They would like to buy from us rather than China. And we have to build upon this more and more. Second, the incentive what you're talking about is like Japanese have spoken about it with some concrete idea, but they are talking of Chinese people moving away production from China, the Japanese guys moving out of China to other countries. So it's about shifting the operation base. That'll take time. That won't happen overnight. And US is talking about it, but they're yet to hear what the concrete proposals on the ground are. So my feeling is it's a nascent idea which will take time to mature. You can't depend upon that in the short term. But yes, we all have to build upon this sentiment.
Just to add,
that actually question I don't know, but that's how I could understand. Yeah.
Thank you. Then one sorry. Hello.
No. So just to add to what Dilip was saying, this is Kalyan. I think there has been some trends in terms of ventures. We just entered into a venture with a German joint venture in insulators, and that was Germany making a choice between China and India, and then we were their partner, and we just entered into a few months back. And of course, China themselves, we've been hearing, and we've been also approached in terms of whether any JVs are possible or partnerships are possible with them, but outside China. So equally, China is also looking at making sure that they are not over-dependent on their own location, but outside too. So you would see both other countries trying to do it as well as China themselves trying to do it. So there are, as Ashish earlier said, it is about if you are in a very strong balance sheet, how do we take advantage, or how do we in a better position later? Will be an opportunity.
Thank you. My second question was, if you could just help us understand what is the current VSF price globally, or let's say indicative China, and is that really relevant in the first place to look at it, given that, as you said, there is a lot of inventory accumulation already and there is shutdown which is happening. So is it really a relevant price? Because once things start, will that price in a way be relevant for India, or how should we look at prices in the current scenario of what we are seeing in China as of now? Thanks.
Yeah, I would tend to agree with you because the price has no relevance right now because this is just a fixed price. So every week there is a price being quoted for, but in the real life there is no transaction happening. So issues until the demand picks up and the price has no meaning. Even if you offer 20% less, if I don't need, I won't buy it. So I think what is happening in China is the CCF price is a fixed number being given for last 3 or 4 weeks. But how much business?
And what is that?
We don't know.
And what is that, if I may just request? What is the reference, whatever the price indicative?
For the export, they're indicating $1.25 to $1.3. For the domestic, about $1.2. So it is all kind of price they are talking about. So I think it is, but issue is until the demand picks up, the price has no meaning. It is just a one-sided indication. There are no big transactions happening in China right now.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Kevin Korea-Kusin from Alpha Line. Please go ahead.
Thank you for the opportunity. Sir, can you give us some idea on how much EBITDA realization we can maintain in both VSF and chemicals?
The EBITDA realization, meaning, so it's, see, I don't know what period you are talking about.
So EBITDA per ton?
Yeah, so no, like I said, we won't be able to, provide any guidance on that. You'll have to wait for the March results and then you'll have the numbers with you. And of course, March results also will be not at all indicative of June, as you know, because March will be 2.5 months of normal course business.
Okay. Okay, got it. That's it from my side. Thank you.
Thank you. Next question is from the line of Rohit Nagraj from Trinity Securities. Please go ahead.
Yeah, thanks for the opportunity. So, for the month of April, our chlor-alkali plants, as you suggested, are at different stages of operation, right from maybe 25% to 30-40%. Now, given that for the entire month the operations will be at lower level, will it result into a permanent loss of production for the entire year, or it can be recouped in next months or quarters, given the demand situation improves?
I think to your point, I think we've been trying to say that the situation is so fluid at the moment that what will be the demand position going forward? We none of us really have a very good handle on it. But to your point, as demand picks up, do we have the capability to ramp up our production very fast? That capability that we have. Now, it'll all be a function of how demand comes up in terms of what we can recover or not. But our capability to ramp up very fast to cater to the demand exists.
Okay, and just one question relevant to that. So, as you earlier also pointed out that chlorine demand is also a factor for alkali production. So, given the current circumstances and evacuation of chlorine is also pretty dangerous and hazardous activity. So, is it forming a constraint in terms of going in for additional alkali production because we are not able to evacuate the chlorine, or the customers of chlorine are not able to take it?
I think let's put it into, both these products run in tandem. So Now there is, and interestingly, the end users are opening up at different stages. While there is a segment of the metal side on the steel and the aluminium which continues to run, on the refinery side continues to run, on power side continues to run, on the caustic side. Similarly, on the water side of sanitation, on chlorine side it is running. So we are balancing it out. The number of days for which it's been running has been not adequate enough for us to figure out at this point in time which side is leading and which side is lagging. I think as more and more industries open up, that clarity will come to us. But to your point, from the perspective, are we balancing and running it out? Clearly, that's the primary objective.
Right. Thanks. And just last small clarification on the logistic front. What is the current situation as per your understanding in terms of the interstate logistics, and how is it smoothing out? Because you must be having a dialogue continuously with the governments across different states and the regulatory authorities. That's it from my side. Thank you.
So I think on logistics front, compared to the first week to now, which is the end of the third week, there is a substantial difference. I think it's improving on a daily basis, clearly, but getting hold of drivers and trucks to do long distance continues to be a challenge. But I think as industry pans out, as it starts moving out over the next couple of weeks, we will see quite a lot of substantial improvement. So it's improving on a daily basis is the direction I can give. Not only on the domestic front, even the container export has slowly started picking up and things are looking positive.
Thank you, sir.
Thank you. The next question is from the line of Asit Kapoor from Kapoor and Company. Please go ahead.
Hello.
Yeah.
Yes, sir. Good afternoon, sir. Sir, could you give some indication on how the price trends have been for the caustic soda segments over these few weeks? As China market is now opening up, what have been the price trends?
So you see, that's what I'll go back to Dilip's statement. We've not seen any material movement as such yet to arrive at a price. So if I were to look at the published report, the contractual price continue to run the way they are. The spot pricing, actually, there is no price yet because whatever price anybody quotes, there is a contra price which is available. I think it's too early for us to really say what the pricing on a stable environment will be in this particular time. I think another month or so we'll have a much better clarity there.
So since we are running our plant and both the products are being produced, our realizations factored in at what prices? Average realization?
In terms of, again, it's getting into a guidance of pricing which we'll not get into. But what is our plant running at? We just said our plants are running at about 20, 25, 30%. And that also, some of the plants are running, some of them are still not opened up. It's not material volume yet for us to really ascertain the real price of the Indian market.
And I think it will be a little bit of an irrelevant data point because we wouldn't want you to base the current situation and the quarter on the basis of some of these price points.
So since you told that aluminum industry and all didn't face any shutdown, and we were at a shutdown, so where was their demand meeting up? I mean, how were they sourcing the caustic soda?
Again, that's what I'm saying. The contractual on some of them, these are all long contract prices which are continuously going on. But a large portion of our sales is also which you do on a spot basis, both on solids when you convert to flakes and also on the spot live which happens for smaller customers. Those markets have not opened up to get a complete picture into what your answer is. And I think it will take some time. I think another 15, 20 days, a month, you will have much better idea. Maybe when we declare our results, we'll have a much better clarity on this point.
No, I got your point, sir. But the volume of take from your user industries, which did not face any shutdown, how were we able to manage that? That is supplied from an inventory part only? How did we manage to supply to an
from the limited operations here.
Right. I think one point I just want to share is we are the only one where we have units of chloralkali spanning across India.
Right.
So we are very close to the customers, and we try and then run those plants wherever the demand is. For example, the alumina segment, we have supplied to them. It's just that that particular unit runs harder, and then rest of them don't run because they will be running at much lower, because that is for chlorine and other disinfectant products. So we have catered to them. It's not that we didn't. It's just that we are much more spread out, and that's our advantage too. And we have done that. Okay?
Right, sir. Thank you, sir. Thank you, sir. All the best, sir.
So, Saket, if there are no more questions, should we close the call, or are there any questions that you would want to take up?
Yeah. Sure. Sorry. We'll take the next question. That's on the line of Sanjay Singh from MK Global. Please go ahead.
Yeah, thanks for the opportunity, sir. My question is related to VSF prices. So before the issue of COVID-19 started happening globally, I think even before that, VSF prices had fallen to the range of around $1.35 per kg in China. So in CY19, if you see, there was a price correction of 30%. If in current scenario, when you expect that global economy will take some time to revive, so what is the long-term outlook on VSF prices? I am not talking about this quarter. And in terms of our profitability also, if we exclude BFY, I think our EBITDA per kg was 2.5 rupees in Q3 FY20. And in last 10 years, we have reached our bottom was around 9.5 rupees. So we are almost closer to the bottom. So if going forward, if we exclude the current quarter, considering current global environment, and last quarter also we had spoken about Chinese plants operating at 74-75% utilization rate. But even then they continued to operate when the COVID situation was there. So can you give some sense on long-term price outlook? Maybe after this quarter, maybe after 6 months.
Ashish, you want me to respond?
Yeah, Dilip. I think specific numbers we can avoid, but directionally,
yeah, it's very difficult to give you. You see, the issue is you must understand the pricing is a function of supply demand. Now, while you spoke about pre-COVID and post-COVID, when the China COVID was at the peak, the prices went up because supply got disrupted. So there was a period when VSF prices registered a significant increase in Q4 as well. So I think we all have to see how this whole OR thing in China shapes up. You can't make a call, because if it remains at less than 60%, you will have a different pricing scenario. That's the ideal scenario. At less than 60% OR, I think the demand supply will balance in the normal situation. But if the 60 goes to 70, the prices will change. So I think the dynamics are different, and where the bottom comes is where the worst case a player can go down the variable cost. So what happened in FY19 when there was a huge surplus capacity, the players started selling at near variable cost plus. So that you can know is the bottom, below that nobody can work. So then it starts moving up depending upon who falls out first. Then I told you last time, in China, there is not one China, there are 23 players in China. And the cost from each player varies, the lower to higher. It's a 20 to 25% range. So what happens? The high cost players start falling apart, and that's how the prices go up. So it's a very complex dynamic, very difficult to give you a number. But issue is over the full year, you will see different ranges of prices. One is supply demand, and demand is seasonal again. So there are times when the spring summer is there and autumn winter is there, demand is more, prices will go up again. So we have to understand the cycle. So maybe when we meet later on, we'll have some little more clarity.
Yeah. And indeed, there's so many factors out here. And in addition to what Dilip said, I think just coming out of this situation, if there is government stimulus that is provided, plus there is government further protection that is given on import side, etc., that we are actively talking to them about. then possibly you will have a divergence in domestic prices, and you'll probably realize better premiums. So we have to yet see how it all pans out.
Thank you. The next question is from Dhruv Sanghi from Sanghi Investments. Please go ahead.
So my question is very normal and very normal. If the Ultratech is the market cap is 1 lakh crore and the Grasim is holding 57%, it's close to 57,000 crore. If Grasim is available 36,000 crore, if I'm giving the 75% discount, it comes to 15, 17, 18,000 crores of the evaluation. If the Grasim is available at 20,000 crore, why the company will not come into the market and buy 10% stake to restore the shareholders' value? Rather than asking the VIX and China and COVID, which is not in our hand. If you want to restore the values of the shareholder, right, put the 3,000 rupees into the equity directly to buy 10% stake rather than putting the money into the idea, which is deteriorating every time. We are asking for the VIX, discuss to give it 8% discount.
Mr. Sanghi, your audio is breaking, not very clear.
No, so I think, I have understood the question. I can answer this question in pretty much one line. I think it's an opportunity for shareholders to look at the company, and the math that you did provides an opportunity to all the shareholders.
No, sir. My question is very much candid and very much clearly. So if you are putting the money into idea and it is deteriorating, the shareholder money is deteriorating. Rather than putting the money into idea, rather than going to the buy the 10% stake, which is costing 3,500 crores, 10% stake would be restore the value of the shareholders. The stock price is almost 30% from the peak. So rather than asking what the fundamental or technical part, coming to the point where would the investor will get returns, sir? Because the normal investor is always doing their money into the equity market in India. Rest of few stocks, buying few stocks, right? HDFC buying or whatever, is best management, right? You are selling best. So why don't you come into the market to buy 10% stake straight away rather than asking anything? Please reply. I'm very humble to listen to you, sir.
So again, the voice was not very clear, but I think I heard bits and pieces. VIL bit. So the math that you did, I just mentioned that it provides an opportunity for shareholders to buy. Second bit on VIL you mentioned, I think VIL, I don't know why that question is coming up, because in the past we have put money, okay, and we know the history. It was last year, okay, and there is no current proposal, so there is no question of us evaluating a proposal to put money in VIL when there is none. Okay, and the third thing, what you're saying about 10%, I didn't really get. What are you saying about buying 10% in what?
No, I'll tell you. If the Grasim is valuation of 35,000 crore, wherein the 17,000 crore from Ultratech, the company is available 20,000 crore as per my understanding. So rather than putting the money into any of things, go and buy 10% stake straight away from the market when Sun Pharma or another promoters are doing it at this point of time.
Yeah,
so sure. The shareholders' value, sir. Because what happens? So let me complete, sir. All the questions which are heard from various people, various legendary people, they were fundamental things. I am asking straight away the P&L side, right? So rather than talking to the balance sheet, I'm coming to P&L side. So why don't you go and buy 10%? You use the buyback or straight away go into buy the 3,000 crores, put it into the equity market and buy the shares. So eventually the stock prices will sustain, it will go up to restore the gain, thinking about the shareholders rather than asking some another things. Please throw some light on that thing, sir. Would be appreciated.
Yeah, sure. I think this is, a similar question to what I think Bhavin had asked earlier on buyback, on just buying, Grasim's share itself. And I responded to that question saying that, in this time when there is no visibility of when you will be able to run as you were running earlier and generate cash to meet the requirements of the business, cost and capex, etc. I think we would like to take a little bit more prudent view and look at buyback or any of those steps when we know that there is no large requirement of cash that is there in the anvil. Some of the companies who are doing that, they may be doing that because they don't they have enough cash and they don't possibly see any deployment avenues going forward.
Last question from my side. I'm a too small investor from Gujarat, right, from Ahmedabad. So my always thinking is that if you put our money into such a company, right, if the price is 30% from 100% to 30%, why the management will not come to restore the gain of the stock shareholders rather than telling the riskers will give 10%, idea will not put the money. It's all the jargons for the investors. Yes, in the longer term it will. I'm not denying that. But do something to the shareholders rather than telling to the shareholders. I'm humbly privileged and I'm requiring some concrete from your side rather than some statement which I heard from the various people in the political side also. Please do something concrete on the shareholder side rather than make the statement. Please.
Sure. We note your comment. Thank you.
Thank you. Ladies and gentlemen, that will be the last question for today. On behalf of Grasim Industries. Sorry, sir. Please go ahead.
No, that's all right. I just wanted to thank everyone for joining the call. I hope that we come out of this temporary disruption soon enough and we come out safe. We as group are actively contributing to PM care and donating PPE, masks, ventilators to fight this battle. So please stay safe, and we look forward to speaking to you again in May after we announce our March results.
Thank you very much.
Okay. Thank you.
Thank you. Have a good day.
Thank
you. Thank you. Thank you, God.
Thank
you. Bye.
Bye.
Thank you, ladies and gentlemen. On behalf of Grasim Industries Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your line.